On the show today, we'll discuss Nigeria's financial inclusion strides. As always, you can join the conversation with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Ubodaga. Now, with financial inclusion being a topic on the rise globally, we see many policies and initiatives being introduced into the Nigerian financial markets today. Now, this rise, which has been accelerated by mobile phones and the internet in Nigeria, encourages the central bank and other stakeholders in the financial sector to deliberate on ways to raise the bar. So we ask, what is the progress of Nigeria's financial inclusion drive? Modupe Ladipo, former chair of EFINA board, joins me now to discuss this. Thank you, Modupe, for taking the time out to join us today.
You're welcome.
So we've made quite a number of strides in terms of how we're getting on with financial inclusion, especially on the last mile, breaching the last mile. But share your thoughts or your perspective on the progress we've made so far.
Mm-hmm. So when we first started on this journey in 2008, we found that 53.5% of the Nigerian adult population was financially excluded. And as the last time we did the survey, in 2016, that number had reduced to 41.6%. But that's still a very large number, representing about 40 million adults. We had the National Financial Inclusion Strategy, which was launched in 2012. And the overarching objective of that strategy is to make sure that by the year 2020, only 20% of the adult population is excluded. And as at 2016, we're at 41.6%. So you can see that we've made some progress, but we still have a long way to go.
And speaking about a long way to go, I know that a number of innovations have been added in terms of, for example, including the telcos, fintechs, to for us to gather more momentum. But let's talk about, before we go there, let's talk about the challenges, recurring challenges that we saw at the beginning. How would you assess them now? Have we been able to conquer some of them?
So in terms of the core challenges and the barriers to access, we found that distance, we don't have enough financial access points in Nigeria. So if you have to travel a long distance in order to go to your bank branch, it becomes a problem. So if I'm only saving 300 naira and it costs me 200 naira to get to the bank branch, of course you're not going to go to the branch. So we had that. That's still an ongoing issue. We've had issues around ID, a unique ID for all Nigerians. So we've had many sort of various options or various solutions along the way, but we still haven't had one common ID that everybody has. So that still is an issue that we're still having to deal with. Irregular income, because we have very large informal segment in Nigeria. When we do our survey, we find that only about 15% of the adult population is actually in formal employment. So the rest of the population are in informal employment or unemployed. So we have to think about that. Irregular income becomes a challenge. Unemployment is also, if you don't have a job and no source of income, then it's very hard for you then to be engaged in the formal sector. So as we've seen access improve, what we need to then also improve on is in the actual usage. So we see still high levels of dormancy. Financial literacy still is an issue. People do not understand the benefits of using these financial products, or maybe they don't meet their needs. So that still needs to be something that we need to look at. We need to be provide more customer-centric products, and we need to understand that one size doesn't fit all. So these are the key sort of issues, barriers that we've seen over and over again, and then the redress mechanisms need to be better sort of available and accessible.
On the issue of awareness, because I know that there's still a lot of awareness on mobile money itself, that's still quite low. How about, because I'm thinking there's so many moving parts and there's progress, but there's so many moving parts. On the awareness side, I'm thinking, how about taking it to the grass level, disseminating information at the grass level? Because if we're doing, because a lot of it is going on the state level, federal level, so I'm thinking, okay, if you're going to reach the last mile, those in the communities, villages, how about, maybe through the local government councils, maybe, I don't know, something that could be done at that level to spread that information out quickly?
Sure, but what tends to happen, we do that, and currently I think the CBN and some of the market operators and EFINA are currently working on a market awareness campaign for mobile money and agency banking in 2 particular states in the north. And they're running those through radio jingles, because we feel that when we do our survey and we ask people, where do you hear information from? The radio is a very good source of information. But what tends to happen is that you get that peak through that period where you're doing that awareness campaign, and then as that awareness campaign finishes, then there's a drop off. So they will access it and then maybe not use it again for whatever reason. So we never really sort of go back and understand, was it effective? Why didn't it work? Why did you not stop using the product? Did you not meet your needs, etc.? So the awareness campaign has to be continuous. And for a few years, and which costs a lot of money.
I guess therein lies the problem.
Correct.
Because I'm thinking if awareness for something of this scale obviously has to be continuous, and get into the psyche of people that, okay, we need to do this.
Correct. So that the high levels of investment that requires, sometimes we're very much more about short-term returns rather than long-term patient capital. So for us to really get that message across and to keep it top of mind for the low income and the rural area, a lot of investments will need to be made.
But isn't there impact assessment? I mean, even if you do it for the short term, but then you look at the impact that it's made for that
Sure.
period, it's something that could encourage longer term investment in awareness.
But then what happens in one state is very different to something that would happen, and even LGA to LGA within a state. So it could work well. That it works well in one state doesn't mean it's going to work well in the other state. So we do understand what has worked and what hasn't, but then there's no will to sort of keep paying for that through many LGAs. If you're thinking of the local government, there's 774 LGAs in Nigeria. So if you think about having a campaign that effectively touches all 774, you can imagine the cost of doing that. So everybody has to really sort of maybe come up with a pool.
How about, private sector cash? Because I'm thinking if we can sell this to some corporate bodies and say, look, this is for the long haul, this is a benefit, perhaps benefit to you too in some way.
Well, maybe the new super agent network that they're putting together, the expansion facility that was announced recently by CBN, the mobile money operators, the super agents. Perhaps the message...
Is it the shared agent network?
Yes,
okay.
yes. So perhaps through that, the agents also need to be conveying that message as well, use them as a word of mouth in the local, within their own environment. But what tends to happen is that particular agent has his own core business, and his focus, that's where he makes his money from. So unless he realizes that the money that he can make from agent commission supersedes the money that he's making from his core business, he's not then going to go out of his way to start marketing that service quite aggressively. So the thing, one, it's a very good idea, 500,000 agents by 2020. It's a very aggressive target, very good idea, but we need to make sure that we think about how do we make sure that the volumes of transactions are at a level that really makes it a very viable proposition for the agent.
So obviously impact assessment will be crucial. Still on the one last point on challenges. I also knew that high cost of transactions, has that changed?
Well, yes and no. So there was a drive at the earlier part of the maybe 2010, 2014 to really remove COT on transactions, some of those other charges that we had, and then over time that has been superseded with stamp duty. You suddenly have the account maintenance charge, and all sorts of other charges have sort of crept back. And so that continues to be an issue. So it was diminishing, and then now it's on the rise again. And we always say that they should do the math. So if you put 10,000 naira in your bank, how long will it take? And you don't touch it. How long will it take for the charges to erode your 10,000 naira? And so a lot of people say, well, why would I put it in the bank and have my 10,000 eroded to 6 or 5 when I can keep it, under my mattress, under my bed, whatever, and it's still 10. If I go and look at it tomorrow, it's 10, and there will be no charges on the first of the month. So we really need to think about whether we want to have a tiered sort of charge structure where people with a minimum balance in their account maybe then don't pay any charges, something like that. We need to start really thinking really creatively about this, because the cost of running an account can be quite prohibitive. There's nothing worse than seeing your SMS alert on the first of the month, debit.
And you haven't made any major transactions.
Exactly.
I knew that feeling. I read a report that said, the conclusion was that a majority, still on the challenges exclusion, majority of the excluded were youth and women between the ages of 15 to 35, and those living in northeastern part of the country. So it's very possible that there are actually some spots, areas in the country that have not even been touched by the whole financial inclusion drive.
Correct. So we see that, through the 5 cycles of the Access to Finance survey that we do, which EFINA does at the national level, we see that the Northeast and Northwest predominantly have very high levels of exclusion. And we need to understand some are cultural, some are just, to do with religion. We really need to better understand each person's, clusters of people's reasons and barriers, and then maybe try and think about design products and services that suit those needs and barriers. The youth, for example, they don't have time. They don't want to be bogged down with going and stand in a queue. They're all on social media one way or the other. So
but that's one way, that's one place to get them.
Correct. So we need to really think very efficiently and effectively about how do we use social media to really sort of increase awareness and maybe get feedback as well. Not just, here's our product, and when we sell it to them, then we never touch them again. It's about really, what worked for you, what didn't work for you, let's refine this product, let's move on. And what works for somebody today may not work for them tomorrow. So we really need to understand each person's, your financial life cycle.
And that is for also areas that even have mobile network facilities. Correct. In the first place, because I knew that there are some parts of this country that so we to just let those people just be for now and focus on areas where because it would appear that some people could get left behind.
Sure, but in those areas where we currently do not have network facilities, then what we should be doing is really sort of having a real good proliferation of agents, because those places will have mom and pop shops. So we need to make sure that then lots of those agents are providing financial services to that community, so the person doesn't have to travel far in order to undertake those transactions up until the time that they're then able to have a network in their neighborhood.
Okay, now in the bid for us to gather more pace, gather more momentum, so there's telcos are on board now, there's the fintechs, microfinance banks, the deposit money banks themselves, and these are ongoing conversations about who should take the lead. Do we have telcos who are already doing part of that? Do we have them take the lead? Is it the banks? And then the fintech, because when it comes what I like about the fintech is that they come with a lot of innovation, and it's like financial, they're like a bank, but they're not a bank, and they provide some of these services that the banks do. So there's that, I don't know, some sort of competition, but I'm thinking, what are your thoughts on how this is playing out, and maybe share your thoughts or perspective on who could take the lead, or if that's even necessary in the first place?
I don't really think it's necessary. I think we need to collaborate. When we talk about 40 million people excluded, it's a huge problem that cannot be solved just by one particular market player. So I think there has to be effective collaboration across all market players. And as you have those market players, there will always be new entrants, because that's the way markets evolve. So the regulators also have a role to play in ensuring that they don't stifle innovation, whilst being mindful that they don't want things that would create financial sector instability or problems. But they have to also keep abreast of some of these issues. The telcos have their role to play, the fintechs have a role to play, the banks have a role to play, the microfinance banks have a role to play, but across all of those market players, there's something that is a key component of one of the barriers you asked me about, and it's about trust. How are we going to engender trust across the whole market in its entirety, whether it's insurance, whether it's pension, whether it's a bank, etc. Because I see that trust is one of the things that I hear all the time. We don't trust them. They're here today, they're gone tomorrow. How do we, if you only have 20 naira or you only have 20,000 naira, that's your whole life savings. How do you then decide where you're going to put it, and then not find that, the bank or whoever it is, microfinance institution, whatever it is, has then folded or their license has been revoked. So we need to engender trust across the whole value chain. We need to understand how do we scale, because it's scale that is really important now. And to scale, you need to have the right products. You need to have a diversity of players in that space so that I have lots of options. I need to be able to access it at anywhere that I want to, at any time that I want to, and then also it has to be cost effective for me and meet my own needs. So each person should play, they should, when they form their collaboration between themselves, they should decide how their business model works for them. It shouldn't be mandated by anybody. So whoever leads in that partnership should be entirely market driven, depending on whatever business deals or models that they come up with.
So speaking about models, the model or the strategy that we're using right now, is it tailor-made for Nigeria? Can we take a leaf from the likes of East Africa or Kenya, to be specific? We saw the way M-Pesa revolutionized mobile banking for them. I'm thinking, can we take a leaf from that? Are we operating a model that we just created here, or?
I mean, you have to contextualize everything for your own country and your own needs, right? I mean, here we see things like, you know, if you ask people in the financial services, they will tell you that USSD banking and transactions is the fastest growing form of transaction, you know, banking in Nigeria at the moment, which you don't see in any other country. So we have our own anomalies of how we develop our own products and services. But USSD works only if I have a bank account and you have a bank account. It doesn't work for the excluded. So we have to think about how do we bring something to the excluded, given that they tend to be, like you said, women, farmers, have lower levels of education, lower levels of literacy. One size doesn't fit all. Not all women are the same. So I think people just think women, I'll design one product and that will take care of women. I'll design one product to take care of youth, right? And really better understand their needs, not our own idea of what we think they want. You know, market research is something that we're not doing very well in Nigeria at the moment. I was going to come
up with that. So whose job would that be? I mean, obviously, if it's going to be the provider to do, but do you see them making that kind of investment?
Some do, some don't. Again, it's this sort of like patient capital, you know, the justification for doing, you know, your research. I think you already have customers, so they need to have ways of data mining, really understanding what their customer wants. I mean, if I think of myself, for example, in the UK, when I first went to school in England, my father opened an account for me, and I still have that same account till today, right? Because I've changed, my lifestyle has changed, everything has changed, but they provided all the services that I need. They're always touching what you need. We have these products, we have this service, this, etc., etc. So if you feel they're providing you with a good service, you have no reason to change. Whereas I've been in Nigeria 10 years, I've changed my account on 4 different occasions because of lack of customer service. So it really becomes you really need to, one, understand your existing clients, because we spend a lot of time trying to acquire new clients, and there's a huge churn and attrition of your existing clients. So you need to understand your existing clients whilst also trying to attract new clients. And the way you do that is by data mining and some sort of market research.
Still with me is Modupe Ladipo, former chair of EFINA board, and we are discussing Nigeria's financial inclusion stride. Let's talk about the CBN, the strategy, the financial inclusion strategy 2020. We're just 2 years away, but I know that the CBN is taking stock to see what needs to be retweaked, as it were. Share your thoughts on that.
So last year they commenced a refresh of the National Financial Inclusion Strategy. It was always written in the strategy when it was launched in 2012 that at the midpoint we should have a review, reflect what's gone well, what hasn't gone so well, and then maybe refresh some of the targets if applicable. So that's what they're currently working on, and then thinking about how do we accelerate progress in the next couple of years to ensure that we sort of try and get to the original target of 20% exclusion by the year 2020. So I think in that refresh, they've identified some key areas that they're going to work on. I think one of the areas is digital financial services. How do they create the ecosystem and really sort of push that in order for us to see inclusion at
so
great
would
scale.
that mean doing more work with the fintech, so bringing having them play a bigger role?
Yes, it means, you know, really trying to get the agents in place, trying to make sure we have the ID, trying to make sure we have a, you know, probably an ombudsman where we have, you know, people should feel that it's a neutral party they're going to complain to about financial services, and really make sure that that neutral ombudsman has legal stature behind it, so that when whatever their decision is legal and binding. Getting maybe some of the costs down as well, thinking about the cost. Some of the regulations, seeing how can we modify, review them, what needs to be added, what needs to be removed, what needs to be, because sometimes the different departments of CBN that come out with policies, and sometimes those policies actually add odds.
Yeah, hinder.
So we need to just make sure that all of that is aligned.
Do you think that if they could get that right, do you think it would significantly change things?
Yes, in one way, and then obviously government to person payments, payments to government, person to government payments, all those payments need to be digitized. The government also needs, all three levels of government need to be brought into this financial inclusion exercise, not exercise, but financial inclusion, buy into financial inclusion and really sort of embed it at all those three levels in government, so that everybody is working towards that common goal. And it's not just at the federal level or at the state level, also at the local level. Credit, we need to really find a way of making sure the credit bureaus work effectively, and that your credit history of every person that's had credit is correct. And there are consequences if you default on loans as a business or as an individual, so that when you start having these types of rules and penalties, then hopefully some of the high NPLs we're seeing with non-performing loans will reduce, and then we can have a much more robust system. I think these are some of the things. The collateral registry, which they're doing, the movable assets, all those types of things are good innovations, but we still need to get some of these things done quite quickly, so that we can hopefully.
While the CBN is taking stock, yes, 2020, do you see us achieving the target based on what you're seeing now, the pace at which we're moving, the innovations that are going on? Do you see that, or do we need to move the goalposts a little further down?
I think we have a good chance. I mean, the National Financial Inclusion Strategy is not just CBN, it's everybody. So it's a full strategy for the whole country. So if everybody sort of does their own piece of work that they need to do. The legislators come up with the good, bills. There's good consumer protection. We do a lot of advertising campaigns. There's a diversity of players, products, services. People understand the benefits of being formally included. But most importantly, jobs. People must have the economic ability to earn money would also be very helpful. In terms of driving that, and then any government benefits should also be paid through digital means. I think if we do all those things, we stand a good chance. And if the shared agent network is also fully operational, I think we stand a good chance.
There's a lot of talk about the shared agent network. A lot appears to be riding on it. I'm thinking, but what are your thoughts? Do you see it significantly? Do you see being a game changer if it works?
Yeah, I think so, because currently, I think when we did the mapping of the financial access points, I think we had less than 50,000 access points across the whole country. That includes bank branches, etc. So if we can have 500,000, I think that could significantly improve the number of contact points. It's not to say that is sufficient, but at least it's a good
so along the line should be incremental. Is there a plan to, we've started with this number X, and we're maybe 2 years down the line, look at some impact assessment and then increase it by this number, or we're just starting with that flat number now, seeing how it's...
I don't know, but the good thing, the hope is that when you get down the line in 2020, then people are so used to using digital for all forms of payment, and the need to cash out or cash in is reduced, because you already know you have a bank account, you can transfer your money. When you get to your merchant, you can pay with your phone. When you get to school, you can pay with your phone comfortably. Then there'll be the need to use cash is then reduced, hopefully, and therefore maybe then the need to have many more agents then maybe may tail off, rather than continue to need to be exponential. So that is the end game.
No, I've often heard that it's not just financial inclusion is not just about getting the unbanked bank, but providing access to various financial services.
Correct.
What are your thoughts on that? Is that what?
That's what it is. It's a range of services. So we're talking savings, we're talking loans, we're talking insurance, we're talking pension, remittances, the full gamut of products at a price point that is affordable, reliable, and convenient. You know, I once spoke to a lady who she was unbanked, and I asked her, she was a market trader, and I said, how much business do you transact every day? And she told me about 200,000 naira. And I said, why don't you have a bank account? And she said, well, her handbag is her bank account. And I said, why is your handbag your bank account? And she said, it's convenient. You know, it's always available when I'm an entrepreneur. When a business opportunity comes up, I need to be able to seize the opportunity there and then, right? And so as we move forward, we need to make sure that everything is as smooth and easy as a woman's handbag.
Modupe, we'll have to leave it there. Thank you so much for your time. I appreciate it.
Thank you.
That was Modupe Ladipo, former chair of EFINA board.